Everyone, and welcome to the insurance track on FinTech India. I'm Girish Nayak. I look after customer service operations and technology at ICICI Lombard General Insurance. The track today, topic we are going to discuss is digital transformation insurance, and we have with us a set of eminent panelists. First up, we have Mr. Sanjeev Srinivasan, who is a seasoned professional with over 2 decades of experience. Sanjeev is the Chief Executive Officer and Managing Director at Bharti AXA General Insurance since December 2016. His vast experience has started with automation in logistics industries, was later dominated by the insurance industry, both life and general, where he has held strategic and leadership positions. With a sharp focus on profitable growth and strategic partnerships, Sanjeev has played a pivotal role in navigating Bharti AXA General Insurance to its maiden profits in FY19. Emphasis on customer centricity, process enhancement, and marquee products, and various innovations on the back of technological advancements has steered the organization to receive several accolades during his tenure. Next on the panel, we have Mr. Yashish Dahiya. Yashish is the co-founder and group CEO of PolicyBazaar.com. In over 12 years, Yashish has grown PolicyBazaar to become a key influencer in consumer digital around insurance. He believes death, disease, and disability products are the future of the insurance industry in India as India strives towards social security. He is an avid sportsman and has worked in the past as MD of eBookers PLC and as a consultant with Bain & Company in their London office. Our third panelist is Mr. Vivek Chaturvedi, Chief Marketing Officer and Head of Direct Sales at Digit Insurance. Vivek has more than 11 years of experience in brand management and sales across FMCG, e-commerce, and insurance industry. He has been recognized as Digital Marketing Officer of the Year 2019, Emerging Company in General Insurance, and awarded by Insurance Alerts. His experience lies in end-to-end initiative planning and launch with in-depth understanding of brand management, consumer research, creative development and measurement, and social media management in traditional and digital media planning and buying. So before we begin our session, let me just set a bit of context around the topic. So as we all know, India is home to the world's largest youth population. Nearly 50% of the country's population is below 25 years of age. And the next decade is going to be shaped by this Gen Z population. And couple that with the growth of the internet connectivity and usage of smartphones. And this whole generation is a digital native generation, multimedia oriented, extremely social digitally. They prefer digital over physical interactions. That buying distance are very much influenced by ratings and reviews. They prefer instant gratification, need highly personalized products. So it's a very digitally savvy generation. Now, juxtapose that with the industry. When you look at the insurance industry, it's one which is generally thrived on a lot of physical interactions, physical infrastructure. The industry relies on a network of agents, brokers, dealers in the policy issuance part. Even the servicing is through physical infrastructure of garages, the hospitals. You have the third-party agents, third-party administrators, and the surveyors doing the claims. So there's a lot of physical infrastructure that is and physical interactions that are a part of the industry, characterizes the industry. And over the last few years, we've seen technology kind of driving change in this industry. You have a lot of applications using various new technologies like robotic process automation, Internet of Things, and usage of AI and which are kind of changing the face of the industry. So let me start today's discussion by my first question to Sanjeev. Sanjeev, talk us through a bit about this digital transformation in this industry and how the pandemic over the last 1 year has actually helped accelerate this transformation.
Thanks, Girish, for the lovely introduction, and good evening and hello to everyone. I think let me start by just highlighting first a few characteristics of the industry, and that maybe will help the overall conversation that we are also headed towards in the next 45 odd minutes. I think first of all, this is a very highly regulated industry, and we need to understand when we say regulation, it means you're typically operating between some rail guards, which is to say You can't go on either side. And it's important because financial services is important to be regulated, because at the end of the day, it's customers' money, a lot of promises that are being made, and therefore it is very important that regulation is there. But what does regulation mean? Regulation in some ways means broadly standardized products and offerings. Regulation broadly means governance. And of course, as I said, it means that it is driven from consumer centricity point of view, that customers should be aware of what they're looking at. It's also, Girish rightly said, it's very fragmented. And when I'm saying fragmented, it is heavily intermediated. In GI, as much as 90-95% of the business is intermediated. And similarly in life, it's a very large number. And it's not intermediated just in sales. It is intermediated across. While there is a surge of direct to consumer, and that is showing across, but traditional channels like agents, more newer channels like bancassurance, and even the latest in terms of what Yashish runs in Policy Bazaar, which is around comparison aggregators who offer beyond of capabilities to service customers. All these are customer level intermediation to get the policy across, but there is claims intermediation in the sense that eventually you get the vehicle serviced in a garage or in a OEM workshop. Health claims get administered in clinics and hospitals. So the industry really holds a very large aggregated set of supply side and demand side, which is also getting intermediated, right? So whether it is sales, whether it is claims, in some cases, this thing. The third, very important for the audience, is we are an industry which fundamentally is into pooling of risks. The fundamental concept is pooling of risk, and this concept works on the past data. We normally look at claims trends of the past. We look at how data behavior has been in the past to be able to predict how products and propositions will work in the future. I think these are key characteristics of the industry. And if you look at the characteristics, it is very prime to be digitally disrupted. If the plethora of product oppositions that can get generated, the fact that you can automate so many processes and digitize it, all of these, and we'll get into examples and how actually the industry was well on its path to do that. COVID, I would say, has accelerated it beyond of imagination. And I think COVID's role has been to really push the envelope in pushing the speed, and has acted as a catalyst to the industry. Let me give examples of what was happening in the early part of the COVID period. The claims were happening as usual, whether it was a small factory which was wanting to start up, or whether it's somebody's health, even COVID-related claims were happening. And the industry, while had answers of solving for this, even part digitally in the pre-COVID era, but were forced to change gears and solve for these customer-related problems instantaneously at that time. So, there was use of pictures and videos streaming to be able to adjudicate claims, even for the most complex commercial lines claim, because you could do that. And slowly the industry started to learn that it's not just the fact that you're able to stream, but you can systematically start parameterizing, putting it within the conditions to get it to an automation level that it is in many cases straight to adjudication that you can kind of push for. So I think that is one of the first things that started to emerge in this period. The second was around sales. As the COVID pandemic started to, settle down in the first, second, third month, and people realized that there's no other alternative to go about business back than to, really reach out to customers digitally. I think whether it was agents, it was banks, or any other partnerships, they were able to quickly move to, digital and automated ways of reaching out to customers. And I think a lot of journey, and that's been the discussion during the day as well, overall, of how actually you don't need any physical interaction to be able to sign up a proposal with the customer. And I think that started to happen, including things like you could use third-party services to be able to verify data and move on with the proposal issuance form. So whether it was underwriting, whether it was claims, whether it was customer onboarding, I think all of these, which were, I would say, a little patchy in the past, have been pushed towards being extraordinarily, agile and nimble. And I think a lot of work has now got initiated. The industry is realizing, and Indian insurance, even today, would be one of the lowest costs globally when you look at it, because of competitive intensity, overall price being lower, etc. But I think industry is waking up to the fact that even our cost structures today which might be the lowest in the industry, are still high from an Indian context. And digital disruption can bring down the cost by another 20-25% to say the least. And we are already discovering that today. Call centers have gone, digital processes have gone completely automated. And you suddenly see that 25% shaving off as cost is possible, which means better price to customer, more value to consumers, and the overall penetration, which has always been a challenge for a country like India to get better in the times to come. So I would say the journey was on even prior to the pandemic. The industry is extraordinarily ripe for disruption, both in terms of the products and concepts. And I think regulator has also been helping now with the entire sandbox experimentation, where, for example, during COVID, people realized that they were driving cars less, and there were at least 5 to 6 companies which had products where you could just pay as you drive. And some of these concepts were able to get tested. So great times to be in from a disruption point of view, great times to invest in, to create another level of efficiency, customer centricity, and awesomeness in the times to come.
Thanks, Sanjeev. I think you rightly said the pandemic has really given a push to the entire digitization that the industry was going through. Vivek, let me come on that. Sanjeev also made a point about the industry being significantly disintermediated, and a whole lot of distribution being 95% of distribution being disintermediated. Now, as yourself, Go Digit, you started off being very focused on digital, but you have a lot of physical distribution channels as well. So how do you see the movement of distribution? How do you see a time when insurance will be brought completely digitally? What do you see the change in distribution strategies for insurers as we go more and more digital, which has been accelerated by the pandemic?
Sure. Thanks, Girish. So just one thing, like we never started. The only thing which we basically said was we had a name as Digit, and because the name had Digit, a lot of people associated us that we started with a very digital distribution focused approach. So the idea is that when we also see, and I think Sanjeev also said the same thing, that a lot of the time when we think about digital, people start thinking about distribution. Our approach has been till now that the entire this digital world of insurance, it means how digitization affects the entire value chain. And from a digital perspective, what all we can bring. Buying and selling is just one part of it, but bringing digitization to empower partners to sell or service is one of the key things that we have seen, which worked during the time of COVID also. When everybody was working remotely, because the power partners were empowered to handle service requests from the customers also, the leg never broke down. And while we work in an industry which is very, very contact focused, even in terms of if there is a claim, somebody wants to have a physical contact with someone, not with a chatbot. So there, digitization had done a lot. Coming specifically to distribution, buying of insurance is a mix of currently also digital, phone, face-to-face interaction. Again, if you see, it depends upon the product. Where the products are simple to buy and the awareness is high, like travel insurance, two-wheeler insurance, mobile insurance, there the customers are moving towards non-assisted buying, where they go on, say, an aggregator like Policy Bazaar, or they will go to a company website and they will just buy it. However, there still products are there like car insurance, health insurance, and then other bit of insurance where the awareness, complexity of the product play a role. And there some customers seek convenience in terms of a physical person explaining them what is covered and what is not covered. So what we feel and our view is that as awareness grows, as people come more and more online, what happened in e-commerce and what is happening in retail, which typically people call it showrooming, that a lot of people go to the physical showrooms, check out stuff and buy online. In case of insurance, it will be reverse, where a lot of people will come online, do their research, and then they will again go for a trusted hand of agent or a partner to buy the product. So that is, and we are seeing it now also. Some of the services which our agents and brokers are able to provide, customers still find it very, very relevant. So no general rule in terms of how, like, whether everybody will move online. I think India is quite a big uh, geography. Both online and offline channels will have equal importance, and both will thrive.
That's a interesting perspective, Vic. I mean, what you're saying is that insurance consumers will continue to buy their products from the channel of choice, but they'll expect digital means of servicing whichever channel they go to. So that's very interesting. Over to you, Yashish. And we've been talking just the general insurance customers so long. So let's look at across the gamut of general and life insurance customers, since you are aggregator across both the industries. What's your insight on the differences in consumer behavior before and now during the pandemic, 1 year past the pandemic?
So, the awareness has definitely grown. The consumers are definitely more keen to procure insurance as a means to protect against, the impact of death, disease, disability. However, that has just started yielding what you would call very high numbers in terms of sales. So you have not seen queues of consumers, right? What you might expect in a country where, let me say, as a country, we have about 6 crore families that earn more than 5 lakh rupees a year, and that have the ability to go and buy insurance to protect themselves, right? About 6 crore families. About 15-20% of them have insurance. The remaining 80-85% do not have insurance. In a pandemic like COVID, you might have expected the remaining 85% to come out on the streets and kind of bang on insurance companies' doors that please give me cover, right? There was no such rush. And I think therein lies, I was telling, one of our earliest investors actually the other day, that if COVID could not make insurance happen, I think nothing in the world is, right? So I think therein lies the biggest problem within what I see globally called FinTech, right? We are all focused on doing the obvious. The obvious is, look, claims should be auto-adjudicated, the process should be technology-driven, everything. But in all e-commerce, see, when I buy something on Zomato, I get the food in the next 15 minutes, and then I eat and I feel something has gone into me and I like the taste and I share it with my family. When I buy a pair of shoes, I get it in the next 2 days. This is a product that our best case scenario is we never use the product. Globally, unless it is made compulsory, most people globally do not buy insurance. Not just in India. It's not an Indian phenomenon. Let's not call it an Indian phenomenon. Nowhere in the world is insurance bought unless it's mandated. Or it is almost sold with a product. People say in Netherlands, people have 9 policies per person. That is because the moment you buy a watch, the Netherlands people, the Dutch people are very trade sensitive. They're a trading community. So you never sold watches without insurance. For the last 100 years, you've always sold a watch with insurance. So obviously people have thus got 9 insurance policies. But if you look wherever in the world motor insurance is not compulsory, you will find only 30% of the people ever buy insurance for even their car. That is the fundamental problem. I remember telling one person, insurance, the person was buying life insurance and they said, why can't he do this? Why can't he do this process? Why can't? And the thing is, I said, insurance kharidne ko mara nahi ja raha. Nobody out there is crying, dying that I want insurance. I want it today. Please give it to me, right? And if somebody is, then of course we as an industry have a massive risk, right? Because that guy is going to have a claim also. This is also an industry where we as an industry collect 1,000 rupees and pay out 1 crore rupees. So I think we have to be very careful of adverse selection. So it's an intricate industry. I think it will move. I like the pragmatic approach the industry is having, the regulator is having in slowly moving it. I think the obvious parts we should solve. I think whether it's claims experience, whether it's customer service experience, those are obvious. I think it is on us that those are not yet digitized. We are still somewhere maybe 5-7 years behind time. To be brutally honest, I don't think there is any case for digital companies, etc. All of you are digital companies. I think there is no more digital company in the world than ICICI Lombard or Bharti AXA or GoDigit. There is nothing like a digital only company. Like, you know what I mean, right? Now, if you're talking about getting customers online, well, that has to happen if customers are coming online and searching. You look at the number of queries on Google. It is abysmally low, right? We have spent about 2,000 crores over the last 12 years trying to give only one message. You can fall ill, you can go to hospital, please buy health insurance. You might die, your family may not have money, please buy life insurance. And thus we have a large chunk of people who are buying, are coming to us and kind of buying. But all I'm saying is it takes a huge amount of effort at the customer to wake up in the morning and say, I want to buy insurance in the first place. And I think now the second part, why have we not solved the second part of the problem? While I think the leadership has moved, and I think it's very good to see Girish, yourself, Sanjeev, and Vivek, and of course I know Kamesh sir. I think the leadership has moved. The leadership wants to be digital. But fundamentally, we are all sales and marketing organizations. What we report is our premium numbers. Every time we are judged on how much we've grown, how fast we've grown, etc., etc. And those, come from those customers, right? And the customers are not coming digitally. So at the end of it, the organization tends to be more marketing and sales focused, because even the customer doesn't care too much. Yeah. Like, it's a very funny industry. Everybody says, I want a great claims experience. But a customer actually wants no claims experience. Let's get it. Like, the customer doesn't want a claim. Like, nobody enjoys going to a hospital. Nobody enjoys damaging their car and then, getting a claim. And thus, right? And of course, people have to investigate because there's 2% of customers. I think the smart thing to do is to somehow figure out a way to ignore that 2% of customers, somehow figure out that we don't get those fraudster customers on board. And then we give the rest of the customers a very smooth experience with no suspicion, with full trust. I think that could transform the industry. I think the technology part we all speak about is fairly, like, right? It's all fairly straightforward. There's nothing FinTech about it. That's all I want to say.
Yeah. Thanks, Yashish. And that was a good summing up of what the insurance industry's core problem is. So,
and to be frank, this is the problem which probably levers and P&G were trying to solve, and COVID has basically solved it in terms of hygiene and other things. But what Yashish said is completely right. Like, if you see Google queries on health insurance, they are flat. They went up sometime in the month of April, May, June. Now they have come back to their pre-COVID numbers. So that's
Vivek, I'll give you a very simple thing which doesn't exist in any other industry in the world. Okay, so one brand alone is searched 6 times more than the keyword car insurance. That tells you, right? And car insurance is the only compulsory product in the country.
Yeah.
In health insurance, the queries are much lower than the queries of a single brand. Much, much lower. So that tells you what's going on, right, in the market.
You kind of summed it up. No one wakes up in the morning saying, I want to buy insurance. I mean, that's probably the last thing that anyone wakes up. So come back to you. I mean, like Yashish mentioned, I mean, at least get the basic stuff right and get the obvious things done. So how are new age technologies like AI and ML helping in that journey into better the customer experience as he spoke about?
Yeah, so I think taking on from where he left, saying that at least we should fix the stuff that we have control on. We can't get people to wake up in the morning to believe insurance, but of course that is changing as well. I think, but I'll come to that. So I think the point on how today technology or even concepts like AI, ML are getting increasingly used. First of all, across board, there is a lot of decisioning to be done. So when a customer is getting onboarded, I think Yashish mentioned that if somebody walks in asking for the fact that I need insurance, the industry is actually a little cautious, because then there is certainty of claim, and you don't certainly want to maybe insure that customer. But I think the fight at one end is of getting the right set of customers on board. And there is a whole lot of decisioning that happens, whether it is pricing related, whether it is underwriting related, as to how to get the customer to get onboarded at what price, etc. Today, I would say 5 to 7 years back, you had very little information and data about consumers or aspects that affect the pricing or the underwriting here. Today, there are a lot of data points that can really help you in getting that decision and getting that decision automated, served to the customer real time on the fly. And I think this process is, I would say, across pricing, across underwriting, and across claims. Let me give an example, and maybe let's start with claims and then step backward to see how we can move. Today, a typical process of estimating how much is a car damage means that there is actually a physical person who goes across to the workshop, looks at the car, understands where all the damages are, then finds a way to estimate what kind of part cost, labor cost is all going into this. All of this is increasingly getting automated or digitized, and there is a mechanism to actually self-adjudicate all of this. So today, pictures can tell you a story, what you will struggle to otherwise get from people adjudicating a claim. So there are organizations internationally and now in India as well, which are really looking at not just real-time streaming, but actually looking at the pictures to define what kind of damage happened to the closest number that would have been adjudicated in the many years that the company has been adjudicating claims. So the depth of the damage, the fact that would it have impacted an inner part, etc., and what would get replaced is today getting done automatically, and the system is improvising on its own. So while you will work on processes manually in parallel, or use capabilities, but I think today this is all getting done in a very seamless fashion, using some of these platforms that you're talking about. Similarly, health claims today, you don't need to look at which hospital, which data, etc. Today, data automatically gets into the form factor and the policy conditions that you have to really adjudicate again in real time. And this can go to the next level that we don't even need the data to come to us. Actually, it's like the checkout process that is there in many of the other industrial processes, right? You go there, you pick up 3 items, and when you're checking out, it's all built, right? So similarly, customer has to say, I visited a physician, was it insurance covered? So he just keeps ticking all the things that he or she is going through, which is to get a consultation, get a few reports done, then get hospitalized. And just by marking it on your bills, you actually can administer a claim, because all the conditions that fit in there, and then APIs can exchange information and solve for you. So I think it's a mix of how committed are you to this process. The interesting part is some of these, if you look at it from a tech development perspective and running the whole application perspective, could actually in the short run be costlier than just the fact that humans are processing it. And I think it's another way to look at it. And that's one of the reasons why I think the industry pre-COVID did not look at these much more seriously, because it was a cost trade-off. But I guess now it's increasingly moving, not just because of scale, but just the sheer convenience and the consumer satisfaction. So the point that Yashish mentioned, that we look at typically looking at GWP and market share, etc., you'll be surprised to know all matrices on claims management have actually significantly improved in the COVID period, right? And the reason was everything got digitized, everything was automated and auto-adjudicated. And then you're cutting down on cycle times like how? So something which was being done in 28 days is actually getting done in 18, 20 days. And this is just the beginning. It actually can pretty much be done real time if you apply yourself. And I think that's the opportunity out there. When it comes to underwriting, I think as an industry, we are struggling for information. We just pretty much looked at, let's say, health underwriting from a height, weight, BMI index or some history of family which was disclosed by the consumer. But today there are so many data points that you could get about to a customer that you can actually individually underwrite a customer, and there are machine learning algorithms which can improvise this process over a period of time. That something which you had huge underwriting departments for, doctors sitting to really take a call on every case, can actually be done again in real time. So the consumer knows at the moment of application whether his or her policy will be underwritten at what price, with what benefits, differentiated benefits, etc. And again, that's a very, very powerful use of some of these applications and technologies. The last I'll come in just purely product development creation, and I mentioned in the beginning that our view was typically historic. We used to look at past claims to be able to define how to price consumers, right? But today there are more real life applications, and let's just go with travel, for example. While the pandemic has totally shaken that market, but if you were going to the US and connecting through a flight, one of the fears that people have is that they'll miss the connecting flight, and if that happens, it's a fairly large loss of is expensive to rebook another ticket, right? Now insurance can really price this product in real time, looking at which airline, what connection, what time difference are you looking at, and it can be auto priced, auto underwritten, and auto administered in terms of claims. And I think one has to believe that anything in data which has probability can lead you to find an underwriting solution and insurance solution. So whether it is missed flight connections today that people can be worried about, on a leisure side, that you go out for golf and you say, is it going to rain or is it going to be any other weather, and many other such applications of even data going forward, which is you don't have past historic data, but you're actually looking at the algorithms which can help you keep looking at limited data to predict how it will behave in future, could give you phenomenal product development opportunities, which I think the regulator is open to. I'm not saying they are allowing it to be done in hundreds of crores before you realize it's working or not working, but I think in a defined framework, they are allowing people to experiment and see how actually insurance becomes a more day-to-day concept that people understand. And to Yashish's point, that it may not be that they wake up to buy health insurance, but they could wake up to buy something that they are worried about, which can be priced even in small bites, and then familiarity increases, and that starts to improve the market conditions. So to me, phenomenal applications of some of these concepts of AML in all aspects of our business, because I think I would say life insurance as well, but general insurance is extraordinarily data rich. We have so much data that is getting generated about customers, claims, about how they use the vehicle, how they live their life, etc. That has phenomenal opportunities to be able to customize offerings, service consumers very uniquely and differently to their needs. That I think sky is the limit, and I think that is where a lot of startup companies can contribute to create some of these POCs and build on these opportunities, which can really help the industry move ahead. Some of us can think, but I think the opportunity is out there for people to create these propositions in niches and build on it so that it can be quickly adopted.
Good point you mentioned there, Sanjeev, that insurance has a lot of data. I mean, insurance was actually the original data industry, right? 300 years before any other industry thought of using data, insurance was the industry using data for its risk pricing. Unfortunately, I mean, it got narrowly limited to the actuarial part of the business. So it's only now that the industry is waking up to using data across, like you spoke, right from claims to underwriting to policy pricing in real time. So, and the other point you made, obviously, on the openness of a regulator. That's very important in a regulated industry. Where you have to move along certain, like you mentioned, guardrails. You need a regulator to be proactive and to help the industry move along. And Vivek, let me ask you that one. I mean, how do you see the role of the regulator here, the IRDAI? What do you see? How do you see IRDAI helping the insurers move along in their digital journey?
I think regulator is trying. If you see, there are two parallel processes which are going on. One way, because the penetration is low, again, multiple time people don't understand, and this is like the only industry where somebody before buying says, tell me what I'm buying. So push towards standardized product is one way regulator is trying to do. Arogya Sanjeevani happened last year. The new home insurance products are coming up from 1st of April. So there is one way where regulator is thinking about building products which are common across insurers so that there is no confusion. They targeted to people who don't understand insurance much, but they have a feeling that, okay, I want to insure my house, but I don't. So the idea of procrastination because I don't understand is something which regulator is trying to take it away. On the other side, innovation is encouraged through initiatives like Sandbox, where insurers can get their thinking cap on, look at consumer needs, launch, test, learn from products, and basis that go forward. Actually, Sanjeev mentioned it in the first question that when last year COVID happened, there were 5-6 insurers which had paper drive products available. All those were under Sandbox, and that encouraged other insurers also to look into some kind of innovations through Sandbox process. There are certain limitations which are put by regulator in Sandbox, which is either you can sell like 50 lakh some total premium or something like that. The thing is that is also because they have consumer interest in mind, but that product also becomes restrictive. So if insurer builds technology, because a lot of these Sandbox products require a lot of tech development. Now, once you develop those things, by the time you launch it, and then you have to discontinue that product because you have sold it for 50 lakh rupees of premium, then some of those initiatives go for a toss. So somewhere there is, while it makes sense for the regulator to have a cap so that it is not extensively distributed and they can control it, but also it becomes a bit unviable for some of the insurer to invest that kind of technology to actually do some real innovation. Another thing which is happening, not that intuitive in terms of like, again, what Yashish said, that sometimes from a tech perspective, insurance industry is like 10 years behind. While regulators are increasingly recognizing digital mode of interactions, moving away from making paper-based proposal forms, signatures, etc., not mandatory now. So that's also an approach towards that. So these are the way basically right now what regulator is trying to drive digital innovations or digital push in this industry.
Thanks, Vivek. Just changing tracks a little. Yashish, we know that cloud is transforming the whole move to digital, and Policy Bazaar was one of the pioneers, at least in this industry, on moving to cloud. So what's been your experience in the cloud journey, and can you share some of the success stories you've had in that journey?
Oh, it was helpful from a resiliency perspective. It was helpful from deployment perspective. It was helpful from because on the cloud we are using for example Amazon Web Services, but at the same time our sister company is using Microsoft Azure services. So Pesa Bazaar uses Microsoft Azure, but both of them have given a fairly high level of security, resilience, scalability, and that's helped us. But earlier when we were managing physical data centers, it was a little more complicated. But I think from a data, we've also used a lot of the services of those providers. So whether it was Google or Amazon in terms of voice analytics, etc., or the AI that Sanjeev spoke about, and I think, see, 13 years ago, when I was thinking about, I was in the travel industry, and the only reason I entered the insurance industry was because this is all about data. Otherwise, I did not understand insurance at all. I did not know ABC of insurance. And I think that still stays the case. And I totally agree with you all that we are going to see a plethora of usage of data in identifying fraud, in identifying which customers to cover at what price, and which customers we cannot cover, in identifying claims. We're already seeing a huge amount of that, right? Today already I know that almost 70-80% of the claims under 50,000 rupees are now happening in an automated fashion, at least in terms of identifying what the cost is, and various pieces. Onboarding of customers is happening in a digital format, and a lot of the the storage capacity for all of these is being made available through the cloud. See, earlier, if you recollect, there was also some more stringent rules around, where you could have your data centers. And till about 6-7 years ago, none of the cloud providers had their data centers in India. So we were all of us were forced to have data centers within the boundaries, which is perfectly fine, but that was the rule then. So I don't want to take credit for being one of the early ones to go on cloud. We just happened to be at that time that whenever it was got allowed, as in when Amazon opened in India, we moved. It was really that simple. But the good news is what you are hearing today of consumer data being kept in India. The beautiful part is this industry has been doing it already, and so does not have any of those challenges which many of the other areas might have from a data security perspective, etc. I think Sanjeev was also right. A lot of the limitation is going away, and so are you, Girish. The regulator is allowing more and more flexibility. I think the game will open up a lot more, and that will also create demand. All this data will also create demand. Today, why doesn't a young person buy health insurance? Because he thinks it's overpriced for him. Today, the claims on an older person are about 5 to 6 times more in terms of the total severity and frequency put together, but the price may not be 5 to 6 times more. Right now, the young person feels that there is various taxation issues. So I think a lot of things have to come together for the industry. It will become a pull industry. I think there'll be a lot of innovation on the product side. Now, but the catch here is the moment you innovate, suppose X company innovates, it doesn't stop the remaining 50 to innovate almost immediately within the next 3 months. If the product makes sense. If it doesn't make sense, it's okay. As was being mentioned by Vivek, nobody will, like, let me put a very simple thing, right? We've had 7-8 companies launch special products on motor. We've done a lot of stuff. A lot of effort has happened. I wouldn't be surprised if the total volume that has happened from all those efforts in the sandbox put together is less than 1% of the industry. And that is precisely where eventually the CEO's objective veers away. Right? The CEO says, okay, then let me focus on 99% because I can't afford the 99% to drop by 5% in the over focus on this 1%. And some of our pieces need to mature. See, most of what's happening in technology. See, how is insurance sold in the physical world? It is sold by 2 people talking. And I know that's not a general insurance problem, but the life insurance industry, what proof is there of what they have said? What has been understood? It's a thick document which has been signed by somebody. The online world is obviously more transparent. There is voice recordings, there is X, Y, Z. Now, I think all of these need to be given a lot more flexibility. Right? Today, I know a very simple thing, right? In the life insurance industry, when an agent goes to meet a customer, he says, sir, no problem, I will give you 5,000 rupees cash back. It is illegal. It is totally illegal. Now, you can say, everybody in every other industry in the country is giving it, so what's wrong about it? But either it's legal or it's illegal, right? And I think that black and white clarity in our industry needs to be there. Either, just make it okay for everyone. That guys, cashback is okay. Everybody please take off, and then everybody will start doing 10%, 20%. And, somebody asked a question. I was reading a chat that somebody said they will offer free insurance. I promise you there will be people offering free insurance. But that free insurance cannot be done today because, legally it's not allowed. So there are reasons why you might do that, right? I can tell you, we would love to give free personal accident insurance to the whole country. Because that doesn't cost me much. It costs 10, 15 rupees a year for 1 lakh rupees or whatever. And then on the basis of that, you build a relationship. But many of those things are not, need to be permitted. And so a lot of the innovation that has happened in other sectors, I remember once in a call, hearing your CEO, sir, mentioning very clearly, he said, whatever we talk about as innovation that's happened in Singapore or has happened in China or has happened in US is absolutely feasible here. There's nothing that holds us back from a technology perspective. And, but I think it has to be allowed. That's all. So I think a lot of those pieces are need to come in place.
Yeah.
Actually, what Yashish said, UPI and wallets are a very good example, because initially Paytm was able to do all those cashback. So people were ready to try that out, and then they saw the value in that. Similarly, in terms of UPI also, a lot of this has happened on back of wallet, because wallets were able to push these things so much. And initial push was predominantly due to people saw a monetary value that they will get. And initially, to be frank, there was a question on free insurance. Lot of wallets actually gave free cash that time.
No, but the challenge in our industry, right? Our industry will have challenges. There are large players who would not want that to happen. But there are people we know, right? Everybody in the industry has a different view. So it's a fairly political industry.
True. I mean, different players are differently placed, and they would do different things.
And everybody loves this. See, once they said a king must not be misused. Sometimes what happens is the courtiers might be misusing the king, because by telling him this is right or that is right. And I think somewhere that happens a lot in the insurance industry. Sometimes, regulation can get misused by participants to tweak things in their favor versus others. And I think that becomes the biggest, to be honest, globally in insurance, that's the biggest differentiator, right? It's actually not technology. It is how regulation moves. That's the biggest differentiator in insurance. I know but that's the reality of this industry.
So, Sanjeev, let me just ask you and Vivek. I mean, because being from a regulated side of the industry, there is, like Vivek mentioned, the whole scope of working with startups who are not, who can work on a bit outside the regulation. So how do you see that association working? I mean, do you work with startups a lot? How do you use startups to kind of promote innovation in your companies? I mean, Sanjeev can start off, then Vivek can take it.
Yeah, no, I think huge potential, and it's actually it works both ways. It's not just that what insurers have to offer, but I think it's also the fact that the startup community itself is very excited about solving real problems, right? And I think that's a very important one. So let's just step back and look at it. For example, we talked about, Yashish said, pay as you drive, right? While volumes are still restricted on account of the fact that regulators only allowed so much. But I think it's caught on quickly, and just a few months, every company filled its quota on that. But onboard devices, for example, which is one of the ways that you can get consumer data about how much they drive and all that, is a specialist area. And there are a few startup companies which actually created, this whole solution by offering an end-to-end package that insurers had to pretty much just plug in into their ecosystem, and pretty much any of the 26 companies could have gone live with that solution. So they are dreaming and living that solution day in and day out, and it's sometimes not just for insurers. They are able to do it for lending. They're able to do it for other applications. So that's something that they are. So I think the startup mindset is of solving real problems. And one of those, or a large part of the application, might be in the insurance industry, and therefore they bring, according to me, very highly specialist knowledge. They bring commitment, which is unparalleled, and their purpose of existence is around that. So it's therefore something very differentiated. While it could be one of the initiatives, you like it or not, even as I would say that some of these end up as a list of initiatives within the company, but for those people, it is the purpose of existence. The second is they look forward to insurer companies, because they're not going to get as easily a platforms which is as large, where the entire proof of concept can play out. Their entire project can get tested at a scale, and therefore it gives them future hope of viability and scale up, right? So to me, it's a symbiotic relationship. It's not just that insurers need startups or startups need insurers. It's, I think, quite symbiotic in that way, if you articulate. Another couple of examples would be imaging solutions, right? And I'm saying, I talked about the claims side of where pictures of a damaged car can actually be estimated versus health claim bills can be automated and captured. So Again, imaging as a concept is a very deep solution, and you can go to any extent to kind of get accuracy around that. One standalone insurance company will take ages to be able to master that and use their own data to do that, whereas a startup ecosystem can actually do it on multiple people, multiple industries. They could be working for an automobile company, a lending company, an insurance company, and create solutions around that. A health company could actually be using telemedicine, imaging of bills for customer data creation, etc., which can also be applied in insurance. So I think those are the kind of solutions which exist, specialization that exists, and therefore, to me, it is better partnered than self-created. Of course, if you are wanting to create that niche and differentiation that you have a great idea on, then it's great. The last point I would mention here is, AXA has a very lovely line globally. It's called move from payer to partner. And I think the reason I relate or resonate with it, it's very deep in the philosophy to say that insurers today are looked at as payers of claim, and they're not looked at partners holistically. Right? So today, the point is, car insurance is about when you have a claim, how do you deal with the claim, right? It is not about how to manage and upkeep your car through the ownership period of that car, that you could actually have an asset which gets utilized better and maybe even gets resold better, right? Or even from a choice of car. Similarly, health is about a health claim once you get hospitalized, but not about small consultations, data about your healthcare, how to manage that risk better, what are the alternatives that you have, second opinion, all of which overall as a healthcare ecosystem can provide. So I think AXA's line is interesting because globally, the consumer look at insurers as a settling claims company, and there was this data that we had taken out, which is quite interesting, even in a city like Bombay, that more consumers, and again, I'm saying referring to consumers largely would have been mobile, or people who would have shifted to mobile. When they're looking for a doctor, they go to Practo, they go to other AA number platforms to be able to get who's a good local doctor, and they do not reach out to an insurance company. Whereas as insurers, we are actually giving 5,000 cashless network of hospitals, which means we know doctors, we know hospitals, we know everything about it. So I think it's just the fact that they think of insurers ki claim hua, so then we have to go about rather than seeking information. So this whole journey of moving from a transaction of settling claim to be managing the overall partnership of health or ownership of an automobile or home or risk itself, managing risk better, is a higher platform, which I would say is best achieved when you are able to work very closely with the startup ecosystem, because they build those connectors into that ecosystem in very, very smart and meaningful ways and very powerful ways, which I don't think alone you can. Neither can insurers and nor can the innovators, because they need a platform to operate it on, and we need ideas to experiment with. And therefore, I would say it's extraordinarily symbiotic.
Okay. Thanks, Sanjeev. Vivek, your thoughts on this topic?
Girish, our approach is if something is core, which gives in a long-term competitive advantage, then we like to build in-house. So a lot of work that goes in AI image analytics is actually being done in-house. And what startups do for us is basically whether it's marketing, customer onboarding, data enrichment, sentiment analysis, which improves partners of satisfaction or customers satisfaction. That for that we basically interact and plug and play with a lot of startups. Another thing that startup ecosystem has done for us, we started like 3 years back, and building a huge tech team takes time. So actually, the startup ecosystem actually enabled us to reduce that time frame of developing something quickly. With a lot of outsourcing we did that time. And again, currently also a lot of experts that what we can do in-house is done through us, and then startups becomes those complementary expertise they bring, which we don't have in-house, that they plug in. On the other side, we also work with startups to offer insurance to their customers. So that's also an ecosystem which is being developed. So this applies for in the areas of lending, travel, mobility, where we basically then go to the startups and through them they are able to offer insurance products in a far seamless way to their customers.
I just want to add one last point here, and this is related to COVID again on startups. So a lot of industry wanted to reach out to its customers, to be able to help them with telemedicine, help them with even mental care in terms of people who are under stress and all the stuff. That could be achieved in this period because you could just purely depend on what was happening in the startup ecosystem in some of these projects. So you could scale immediately to reach thousands and tens of thousands of customers because that infrastructure was available there. And it was the need of the hour. You wanted the customer connect to happen. You want to also tell them what is covered, what is not covered, and mental health is a very important subject. So I think a lot of this was getting managed at a very short time in terms of execution because of the access and this ecosystem being there.
Yeah, I think truly. I mean, this is a really symbiotic relationship which we need to kind of build and develop. A final question to you, Yashish, before we kind of look at the audience Q&A. Any words of advice for the entrepreneurs in the audience who want on how to build the next InsurTech unicorn?
I think there are lots of problems in this industry that needs to be solved. And I think the industry is waiting to have those problems solved. One area to work on is the entire claims and the customer service aspect. If anybody today can improve onboarding experience in a genuine manner, there is a clear advantage. The entire healthcare system, how insurance and the providers work together in settling claims, there's a huge innovation required, a heavy lift required. Anybody who sets up operations successful in those areas will definitely be multi-billion-dollar organizations. I do not see how they will not be. The point is, one has to be long-term. One has to think why what they're doing is sustainable. Why it is. You have to always see: are you being used, or are you building strength? Right? As an entrepreneur, that's what I see every day. Are you building strength, or are you being used? So if somebody is using your technology for the short term to achieve some objective, you have to also see how you are benefiting or whatever. And as long as you can keep seeing the balance in that and are largely, building strength every day, I think, there's a lot of problems to be solved in this industry. I think expecting, the one thing I would warn against is expecting consumers to come in droves just because you built a solution. Might happen. I'll be very, very surprised. I would have to pinch myself multiple times to believe it's actually happened, because I have not seen it happen anywhere in the world, not just in India. But that's basically it.
Yeah. So basically, there are lots of problems.
Girish has given up on some of the others on the panel for this question, Yashish, so it only came to you.
No, but there's a guy who is ready for the long haul, right? He's wearing an Ironman finisher.
Yeah, of course. After his last round, he's a true entrepreneur.
Yeah.
He's like going beyond India now. Congratulations on that, Yashish.
Yeah. So we'll just have time for a couple of audience questions. Let me just pick up a couple of these ones. I mean, how do you see the industry 10 years on? What's the kind of paradigm that we are seeing in the coming years? If you want to take that's a 10 years future looking question. So again, a long haul.
I think health claims will be all auto adjudicated, 100%, and I mean 100%. My view is the purchase of insurance would have moved more than 50% online.
Okay.
As in, consumers would only be interacting with companies' websites and apps, not anything else. I think the experience will improve over the next 4 or 5 years. And once that happens, the digitization of the entire industry will happen. I think bank assurance will continue to be there. I think affinity partnerships will continue to be there. My view is long-term agency will really, really struggle.
Okay. And that actually leads me on to the next question. I want to pick up what kind of cross-sell synergies between lending and insurance driving the unified financial services provider of the future?
So I think there are some direct synergies and there are something beyond. And I would say when we're talking lending, we're also, so today I think we talked about a lot in the panel that it's a one-on-one conversation between an agent or and a customer, or a bank officer and a customer, right? So it's episodic, which leads to purchase. I think the journey 5 years from now, 10 years from now, and maybe even earlier, is going to be more purchase linked. So today, when you buy a phone, in the buying process itself, you're buying an insurance. When you're buying a tablet, or when you're buying, so it's getting more closely embedded in the purchase journey itself, increasingly, and rather than a standalone conversation that you will have like you have for health or stuff like that. So I think that part is going to change in the times to come. The second is, I think, proportion of what is today large in the industry, like motor is the largest, is not necessarily going to be what is going to be there in the future, because there are going to be smarter ways to reduce risk in motor. Because, for example, third-party risk is fairly large. You still pay a large amount of premium. With better roads, better safety, better reach to hospitals for consumers, I think motor premiums will shrink proportionally, and health will increase, and so will SME, for example, substantially increase in the future. So I think there'll be a very fundamental shift in that. And to the last point of Yashish, which is today all the new buzz initiatives around products and propositions, which are smart, data-oriented, future-oriented, which are still less than, maybe not even 1%, they are like 0.1%. I think what would need to be seen, and I think that is where the synergy between the startup ecosystem and insurers will play a role, is to be able to take it to 8 to 10%, which will be by then a very large pie. Because as I said, if there's anything which has got probability, and you could technically go ahead and insure it, and that's how rightfully some of the products have been designed in China and in many other parts of the world. We need to look at some of those good ones and see how they apply in India. Basically creating that whole risk protection framework within the country. So those are things I would say would change in the 5 to 10 year horizon, making the industry far more thriving than it is today.
Yes, since we are just almost run out of time, let me pick up one last question from the Q&A. What's the role that you see reinsurers playing in the digital and tech journey of insurers?
Massive. So I think reinsurers will come in a big way. It'll start from life insurance, because it'll start from where, low incidence, very high severity events. And I think the data we're talking about, they are going to be a very large player in that. I think they would also ensure this is done more internationally. So there are synergies drawn between the various countries, etc. So I see the big revolution coming from the reinsurance side. Somewhere, I think insurers are the brands in the experience, and of course the risk carriers. But in high severity events, the reinsurers will need to be there, and they need to have the data. So I see that whole play working really well. It'll start from the life side. It'll come into the health side. I expect health to have unlimited covers in the next 10 years. I do not expect this 5 lakh rupee cover, 10 lakh rupee cover story. I expect customers to be saying, I'm good to cover 50,000 rupees. I'm good to cover 1 lakh rupees. Please only cover me for anything above that. You handle it. And that is where reinsurance will start to come in as well. So I think it's an interesting journey ahead.
I would kind of agree. If I've just got to add a point there, Girish, I think the mantle of innovating will be with the innovators, right? Whether it is distribution or the insurers are the carriers of risk, but for the unknown, even the insurers will be scared. And I think that's where the role of a reinsurer comes in, right? So it's pooling of risks at a different order that will come. And as like Yashish said, they'll come with more global experience, because they're going to be doing this in multiple countries. And therefore, they'll be able to bring not just expertise, but being able to pool it at even a larger level globally. That'll come. So therefore, they have a significant role to play. Even in introducing some of the stuff that has been done internationally successfully or failed in some countries, which actually has more applicability in other countries, I think they play a very meaningful role.
And you may also see new types of reinsurers coming in. So you may also see, a lot of the risk capital that you see in the markets today. let me put it very simply, right? Today you have $100 billion fund. You may have $1 trillion funds, which are primarily focused on solving the reinsurance perspective problem from a digital piece.
Yeah.
And they may just come to insurers and say, this price is available only for the digital customer, only for this customer, not available for the rest. And I think that all of that will really move things towards digital.
Yeah, that's an interesting perspective, because we so far didn't talk about how reinsurers, I mean, they are the insurers, so how they can play a role in shaping this whole journey as we move ahead.
No, Girish, I think last year, if I'm correct, SoftBank spent a lot of time with Swiss Re, trying to take a significant stake in Swiss Re. So you're really talking about cutting edge investor talking to the reinsurer. That would obviously change the mindset of the reinsurer.
Absolutely. So we've run out of time. It was a great discussion. I mean, a lot of excellent points we were able to throw on the whole topic of digital transformation in the insurance industry. Thanks a lot, Sanjeev, Yashish, Vivek, for taking time off and joining us here. And good evening to everyone. Thank you.
Thank you. Thank you so much.
Thank you.